With over 4,758 domestic branches and 10,990 ATMs, Axis Bank is the third largest private sector bank in India. In many ways, Axis Bank is a surprise because it was backed by a traditionally managed government-controlled company, Unit Trust of India or UTI. Still, it rose up to become the third largest private bank. But the journey was not easy, filled with a lot of ups and downs. And there is one man behind Axis Bank's tremendous success. His strategy has totally transformed the fate of Axis Bank, and that's exactly what we are going to talk about in today's video. Banking is one of the toughest businesses to operate. They are fundamentally different from any other business because their product itself is money. Given their central role in the economy, banks are also highly regulated by government and central banks. When the economy takes a downturn, banks are the first to feel the pressure. In 1994, Government of India opened up banking sector for private players. Before that, it was just the public sector banks. So RBI issued licenses to 10 private sector banks. This includes HDFC Bank, ICICI Bank, IDBI Bank and UTI Bank. You must have heard about all the other banks but not UTI Bank. UTI or Unit Trust of India at the time was the largest and the only mutual fund available to Indian citizens who want to invest in capital markets. Being the only mutual fund in India, it had a strong brand and it's logical to use its brand to venture into new businesses. Banking seemed as the best option and that's how UTI Bank was born, which was later renamed as Axis Bank in 2007 as a part of rebranding. Unlike other banks, Axis doesn't have to start from scratch. UTI already had 38 million customers who invested in its mutual funds. The strategy was clear. Axis Bank would use UTI's customer base to sell its products. Being a child of UTI, Axis Bank's board was filled with people from UTI, and its dependence on UTI was evident from the start. In fact, in the first year, Axis Bank opened only 7 branches. Instead, it was providing its services from 41 UTI offices spread across the country. Affiliation with UTI did help the bank. Axis Bank got appointment from big corporates to pitch its banking products. All these corporates were dealing with UTI in one way or the other. Axis Bank got so much business from UTI in the initial days that RBI offered it the direct membership of clearinghouse within the couple of months of starting its business. With the strategy in place, the next step was hiring the leadership team. UTI's chairman S.A. Dave roped in Supriya Gupta, who was the deputy managing director at SBI. He became the first chairman and managing director of Axis Bank. Supriya Gupta's reputation helped in hiring the best talents from SBI. Many of the top management and employees came from SBI. These people joined Axis for 2 reasons. One, the brand of giant corporation like UTI and the unique opportunity to build a bank from scratch. 2, the leadership of Supriya Gupta. With such a stellar start and motivated team in place, you would imagine that Axis Bank had a head start over its competition. However, the opposite happened. Axis Bank issued loans equal to its competition HDFC and ICICI. But one unfortunate difference was the NPAs or non-performing assets. A loan will be called as NPA when the borrower stops repaying. In case of Axis Bank, this number was higher compared to its competitors. Primary reason was Axis Bank's strategy. From the beginning, Gupta's strategy was to lending money to mid-sized corporates instead of large blue-chip companies. But there is a problem with mid-sized corporates. They are not so big to have large cash reserves, and mid-sized corporates tend to suffer during economic downturns. Loans to these mid-sized corporates accounted for more than half of the Axis Bank's loan book. Many of these companies to which Axis Bank lent money went bankrupt during 1990s when the whole Asia was under financial crisis. Situation was getting worse day by day. Axis Bank, which posted 3 crore profit in the first year of its operations, posted a loss of 10 crores in the second year. Axis Bank suffered on the deposit side too. Banks offer 3 types of deposits: current account, savings account and term deposits. Banks pay highest interest rate on term deposits or FDs, and they don't pay any interest on current accounts and pay very low rate of interest on savings account. So, CASA deposits are very cheap source of funding for the bank, and the term deposits are the costliest. So having higher CASA deposits is always beneficial for the bank. But Axis Bank was lacking here as well. HDFC was leading the industry with highest CASA deposits. To build a higher CASA deposits, the bank also needs wider number of branches and ATM network so that people can deposit and withdraw money. But Axis Bank was not spending much on branch network expansion and was lagging here as well. Due to very smaller number of branches, Axis Bank's CASA deposits were just 15 to 17% of the total deposits, and the rest of them were term deposits on which bank paid higher interest. Things were going south for Axis Bank. Rising NPAs, lower CASA deposits and higher term deposits ultimately led to lower profitability. By the end of 2000, morale at Axis Bank was at rock bottom. Employees were losing confidence. From its listing price of 3.39 rupees, bank stock has fallen to 2.47 rupees by 1999. Adding to this, Managing Director Supriya Gupta's health was getting worse and he had to take a break from his responsibilities. It was certain that Axis Bank is going to fail and will be acquired by some other bank. But what happened next was nothing short of a miracle. Jayendra Nayak joined as a Chief Managing Director of Axis Bank in January 2000. He was the government-appointed trustee on the board of UTI. As far as the work experience is concerned, he was the least likely person to be appointed for that position. He was an IAS and worked as a joint secretary in the Ministry of Finance and had no banking experience. But on the basis of professionalism and integrity, he was the best person. He brought in many reforms that saved Axis Bank. By the year 2000, the average salaries of Axis Bank employees were far lesser than its competitors. Nayak scored an early victory by bringing the salaries closer to those paid by its competitors. Nayak faced tremendous resistance from the board as they were not okay with the idea of Axis employees getting more salaries than the UTI employees. But Nayak was adamant and threatened to resign if his demand was not met. He also introduced employee stock options, under which employees will be given shares of Axis Bank. To form a better human resource strategy, he appointed Mercer, a global management consulting firm specialized in human resource. He raised salaries for all the other board members except his. This was a strong message from Jayendra Nayak. He was all in to bring back the previous glory of Axis Bank. Employees saw a person who put his job on the line to save this company and they felt a need to prove themselves. Another major transformation was in IT. Axis Bank had 49 branches by the year 2000. But all these branches used different software versions. It created some difficulties in operations. To bring in real-time online banking, new IT systems were introduced. Next step was to get rid of NPAs. Nayak convinced the board members to infuse foreign capital. In the year 2000, Axis Bank raised 157.5 crores from Actis Capital. With the new investment money, Axis Bank covered all the losses caused due to loan defaults, also called as write-off. Also, these new investors took 2 positions on the board, thereby reducing UTI's influence on the bank. Having won the trust of employees and with the new money from the investors available, Nayak now concentrated on opening Axis Bank branches across the country. By the end of year 2000, Axis Bank had 49 branches, but by 2009, this number was 835. Axis Bank also had the highest ratio of ATMs per branch, 4.3. With this rapid expansion, things started to turn around. Numbers speak for themselves. As we discussed earlier, CASA or the current account and savings accounts are the cheapest funds for the bank, and having the number of branches helped Axis Bank to acquire new customers, also new cheaper funds. Axis Bank was able to sell loans to wider customer base. Company's profitability started to improve. CASA deposits grew by 61%. Loans grew by 50% during Nayak's period from 2000 to 2009. Jayendra Nayak retired in July 2009 and Shikha Sharma became the next managing director. She was the most experienced private sector banker. She started her career in ICICI Bank and spent nearly 3 decades setting up new businesses for ICICI like ICICI Securities and Prudential Life Insurance and made them big. After taking up charge as chief managing director, she made some changes to the board. However, her boldest move was to acquire Enam Securities for 2,000 crores. Axis Bank was lagging behind in securities market. Adding Enam helped in filling that gap. Her next move was to reduce the bank's dependence on corporate loans. Axis Bank now concentrated on retail loans. Many changes were brought in operating style, technology, business model, and wherever there is a gap, it was filled keeping in mind the competitive advantage. Technology was integrated into each and every activity. Jayendra Nayak did the groundwork required to build the professional banking institution and Shikha Sharma took it forward from there. Jayendra Nayak proved that industry experience by itself won't guarantee the success. What helped Axis Bank is the right strategy, highly motivated people, proper resource management, and a great leader on the top to take the right decision and lead the organization towards success. Thanks for watching this video. See you in the next one.